Hello and welcome to CMC Markets Trading Outlook for the week of May the 2nd, 2016. My name is Colin Szynski, Chief Market Strategist. This week we're starting to move past the peak of earnings season, although there's still a flood of results coming out. A lot of the high cap bellwethers have reported. Now we're moving down into the middle tier and some of the later reporting sectors. So the big name company we've got reporting this week is Tesla Motors after markets on Wednesday. We also have a number of major insurers reporting and a number of middle tier companies, particularly in the technology space. So we could still see tech active, but we get a bit of more of a shift in focus back into towards some of the big macro news. We're coming off a week where we had three big central bank meetings and a lot of action starting to happen in currency markets once again as expectations are shifting heading into the summer. What happened at the beginning of the year was we kind of had a big divergence among central banks where we had the U.S. Fed was bent on raising interest rates 4 times this year, and the ECB and the Bank of Japan were getting ready to go full out on more monetary stimulus. Now we're seeing these starting to go back. So the Fed's gone from 4 rate hikes this year to 2, and we'll see about that. The ECB and the Bank of Japan are starting to back away as well. We're seeing a little better economic news out of Europe. We're seeing the Bank of Japan didn't bring in stimulus like people had thought they would. And what are we seeing? We're seeing, well, the euro and the yen starting to bounce back. We're seeing the dollar starting to weaken. And interestingly enough, we're seeing another rally in gold. So I thought I'd start there. And particularly because we're seeing gold actually break out here. Gold looked like it was forming a head and shoulders top here. I'll move this left shoulder over to here. The head was, the head was about there, and the right shoulder was forming over here. And you had a good neckline forming and everything, and it was looking like gold was ready to break down. Instead, gold is breaking out. So that's a function of the US dollar starting to back off. And we've got gold up over 1285. Next resistance for gold is about 1300. And look at this. We had weakening RSI momentum stabilized around 50, indicated the long-term uptrend was intact. And now we've broken out of this downtrend. Upward momentum for gold starting to accelerate once again. And this is significant because we could see a fair amount of speculation on the U.S. economy and what the Fed might do this week because we've got a lot of big macro data points coming out this week. In particular, we've got the ADP payrolls Wednesday, nonfarm payrolls on Friday for the United States, plus we've got manufacturing PMI Wednesday, we've got service PMI for a lot of countries around the world as well. So it's a big week for data. Not so much a big week for central banks, so there is an Australian central bank meeting, but real focus on data this week, and particularly where do we go from here? Because the other thing we've got happening is we're entering May, and people that do seasonal studies of the markets will remember the old adage of sell in May and go away. And the reason why people talk about that is because historically markets have done really well between January and April, and then they tend to have a correction in May and June. And this is not unusual. And then you tend to get a second correction in the mid-August to mid-October range. So one of the weaker times of the year for world stock markets is starting to approach. And interestingly, we're seeing that the U.S. markets may already be starting a correction. We've had a pretty good surge up here, but we're seeing the Dow here was unable to hold above 18,000. It's rolled back under. And look at this here. We're seeing the RSI also starting to fall back under 50. That suggests downward momentum coming in, and we could see this come back towards the 50-day moving average near 17,415-ish. We're also looking here at show the Nasdaq. The Nasdaq has also been starting to fall because of its higher rate weighting in Apple, which has been disappointing. People have been coming out of that. Carl Icahn sold his shares, and we've seen Nasdaq rolled over. It's been trending lower. Look, it's broken its 50-day. It's broken its 200-day here. RSI pointing downward. We've broken this 4345. This was 4,400 around here. We're now back close to 300. This is the 4225, 4,200 potential support area for the Nasdaq. Also show the S&P here. Again, this market is starting to roll over as well. Faltered, was not able to hold above 2100, and it's starting to roll down in earnest. Again, we've got the RSI falling under 50 here to signal a downturn in momentum. We've broken 2060 here. Next support in and around 2040, and this 50-day moving average here around 2030. This golden cross, people talked about this golden cross, but look, if you look, you're in a big sideways trend, and what happens? The moving averages go around each other. So you had a death cross here, a golden cross here, a death cross here, a golden cross here. This looks like it's getting ready to fail. You could see this come back down. They don't mean anything if you're in a sideways trend, so that's something that's important for traders to remember. In terms of earnings this week, the main ones we've got coming out: Time Warner, Tesla Motors, Fitbit on Wednesday, Square and GoPro on Thursday. So it's fairly quiet there. The other market, though, that is active, and we could see quite a bit of interest, is in Canada. We've got a couple of things going on with Canada. First of all, while the US has been weak towards the end of the week, Canada has been holding up quite well, as has Australia. Why? They're more resource dependent markets. They have a higher weighting in energy, higher weighting in mines than the United States markets. That's significant because we've got gold rallying and breaking out, as I showed. We've had crude oil climbing with the US dollar weakening, and this has been holding up stocks in Canada and stocks in Australia. We'll see if that continues in the coming week. If metal and energy prices continue to rise, these could hold up, even though the U.S. market looks like it's embarking on a correction. So keep an eye on that. Also to note, the Canadian dollar likely to be active. We have some big tests here. I'll start with CAD US dollar briefly. Here we have CAD US dollar. Had been in a big downtrend, now it's in a nice steady rising channel. It's running into resistance though, round number in Fibonacci near the 80-cent level, overbought on the RSI, so this could pause or have a bit of a correction in the near term. And if we flip this over and look at the dollar CAD, which is the more actively traded pair, we'll see that sorry, this is just taking a moment. Anyways, we'll see that since this is taking, there we go. It's also been steadily coming down. Very, very nice distribution trend, but getting a little oversold on the RSI, finding some support in and around the 125 round number. So we could also see CAD start to pause here. But we have Canada jobs coming out on Friday at the same time as the U.S. We also have Canada PMI numbers coming out during the week. So we could see some action in the loonie as well, depending on how Canada is performing relative to the United States. One of the things that's been happening in Canada, of course, is the transition in the economy away from its extreme dependence on crude oil after the crude oil market crashed. So we've had the lower loonie has been helping to that transition to go through back to a more balanced economy, but now we've got the loonie trading higher. So how does that all shake itself out? So far, GDP is holding up. We'll see what happens with Canada jobs as the week progresses. So I'll just wrap up here quickly with on this with the U.S. dollar weakening, and I'll show it here quickly on the dollar index. We are seeing the dollar index breaking down again and is starting to trend lower. And where are we getting this from? Well, we're seeing the dollar yen also breaking down. This is a breakout for the yen in particular, with the Bank of Japan coming in less dovish than people had thought. We've cleared this 62% retracement. There's a possibility we could get a full retracement back to 100, 101. First support though in the 105, 106 area for dollar yen. Euro dollar is starting to come back up as it's taking its time a little bit here, but it has been steadily recovering. Here we go. So we're seeing here that we've had these pulses down on concerns about related to, or sorry, this is euro dollar, my apologies. Okay, we've got a big ascending triangle forming here in the euro dollar. It's been in a sideways trend for over a year. Look, massive double bottom here. It's quietly climbing back out of it. As much as the ECB is talking dovish, the currency has been telling us that the ECB is probably reaching the limits of what it can do, and the pendulum's starting to come back the other way. And I'll wrap with cable. We've had these pulses down on various things related to the Brexit referendum, and that like when they negotiated the deal and they started the campaign, and people started to take sides. And each one of these pulses down, though, we've seen support come in at a higher level. And now more recently we've got this starting to advance, breaking out of a head and shoulders base. We've got positive underlying momentum. I think for the next month or so, through May, we could see sterling continue to recover as some of these Brexit fears turn into being overblown and start to ease, and also with the US dollar easing and providing support to sterling as well. Now the issue is in June, on the other hand, we could see quite a bit of volatility, and we could see it coming back the other way, so keep an eye out on that, as we've seen back in previous referendums, with Scotland in 2014 in particular, that that had impacted the pound. So the pound could be still quite active in May and in June. So that wraps up my comments for this week. It does look like it's looking to be another active week for trading.